capital in the real estate space. Alex is a little more experienced than I do in this, and he'll kind of tell you a little bit more about that. But we kind of thought of doing this today because we were talking yesterday about Seth Price's book, The Road to Recognition. We were talking about how Playster had gotten something like $50 million in funding just a couple months ago. And we thought it'd be a really cool idea to kind of talk about what venture capital is and does and how it's helped so many companies really grow and make a huge difference in not only the real estate space, but a ton of different spaces. So Alex, I'm going to go share this post real quick and I'll let you talk a little bit about how you got involved with the Venture Spot.
Sure. So I guess I'll give folks that don't know a quick background on what venture capital is and sort of the role it's been playing within the real estate space to begin with. The notion of venture capital is that, and incubator companies is another side of this, but is basically the notion that companies, established companies, groups with lots of funding and money behind them are able to go in and either acquire companies outright or invest in those companies, and by doing so, allow them to grow in ways that they wouldn't have been able to before. So a lot of times, if we're talking about other industries like manufacturing, for example, say you have a lot of product orders or you have a lot of things that you need to do that way, but you don't necessarily have the capital to get all of the orders put together or set up the manufacturing plant that you need to, or things of that nature. Someone can come in and say, okay, for whatever percentage of your company, I'll make those funds available to you and to the company to do those certain things. In the real estate space and in the technology space within real estate, what that really means is that there is some funding for companies at all sorts of different levels. Everything from your tiny little startup company and helping them get off the ground, all the way up to, like we were talking about yesterday, where Playster is getting something like $50 million in investment in continued capital to continue growing the brand and the company. So that sort of gives you the background on what venture capital is and what it does. Interestingly enough, I'm sort of uniquely qualified, I guess, to talk about venture capital in the space. At least we're a 1-year-old. In that I'm actually kind of on both sides of it. So a little over a year ago, I sold my company to Lone Wolf Real Estate Technologies. It was a company that started 7-8 years before that. And we went through the whole sort of acquisition component. So that wasn't necessarily the venture capital incubator thing where someone's investing, but full acquisition where they wanted to take over us, our product, our clients, and integrate them into some of the things they already had. Then, interestingly enough, my job now, and I was given this opportunity by, funny enough, Lauren Wallace, the guy that started Lone Wolf. Basically what we do is we are a venture capital and incubator group, wherein we will go out and either acquire or invest in companies, and really with the goal of helping them grow. So, we always sort of look at it as, companies with one deficiency that we feel like we can help with, where it's like, they might have a great client set and they've been around forever and a great brand and all that, but maybe their product's gotten a little old and they need to update it. They need some help with that. Or vice versa, a company that's a young startup company has an amazing product that they just developed, but maybe needs some connections and some marketing help and some, things of that nature. So we kind of go in and are able to serve that space where, and then, help these companies kind of grow after any investment components that go into it. So yeah, I kind of have been on both sides of the deal and work on one side of the deal at this point. And so I thought it was an interesting topic when you brought it up, obviously.
Yeah, absolutely. So here's let's kind of give people some background. So you're doing the venture capital part now. You guys recently acquired, I think it was like 4 or 5 months ago, Agent Inner Circle. And yep. Congratulations again. I know I've talked about this and I congratulated you, but congrats on being, the new CEO of the company. So that's huge news. But thanks. talk to people a little bit about, kind of how you guys found Agent Inner Circle. What was about them that made you say, you know what, this is the type of business we want to invest in because we can go from where they are now to where we believe they can be. What were the kind of metrics that you looked at and said, these are the reasons why this is a great company to buy or invest in?
So there are a lot of different metrics that you can end up looking at in terms of being interested in an acquisition or investing in a company, and you can do it for a number of different reasons. To answer your first question in terms of how we found them, there was actually a connection through Lorne through someone else, and Lorne had already kind of spotted the group and had been in talks with them a little bit before I got brought in, and then I ended up vetting everything and doing a lot of the due diligence and that sort of stuff. So I did more of like the vetting as opposed to the original search on this acquisition.
Got it.
But there's a few things. So the first things that you kind of want to look at are, what sort of reach does the company have? And it really comes down to what are you trying to do with it, right? If you're just looking at taking over a product, for example, obviously you want the product ideally to be cash flow positive, where it's generating revenue dollars as opposed to losing money. Although some people will take the investment otherwise and try to help them grow. But ideally, it's a cash flow positive situation. But in our case, we were looking for something that was more of an umbrella for a lot of the other things that we're doing out there. And we were really looking for an agent community where it was a large group of agents that were, kind of in a community that are helping one another in terms of marketing and branding and technology help and sales letters. And we've kind of talked about that before in terms of all the things that are available there. But it really came down to more sort of focusing on that community. Now, the company has two other products that also both happen to be cash flow positive and,
sounds terrible.
1,000 plus clients. Right. And all of that sort of stuff. And really in this situation, it was kind of an interesting deal because the guy that started it 20 plus years ago, he's sort of getting toward the end of his career, looking toward sort of retiring, and was in that spot. And he has a couple other businesses as well that he does.
Gotcha.
So one of which is he's really big into large commercial properties, like business developments and stuff like that. And that's really his main sort of focus. So for this, he kind of looked at it as, well, does he want to go spend a bunch of time to really sort of ramp it back up and get it really growing like crazy again? And he'd have to really intensively spend a couple of 2-3 years doing it. But he was kind of getting toward the end of his career. And it wasn't kind of an interest for him. So it kind of made sense for everybody, right? He was kind of ready to move out. We were looking for the right community. And I think, it's funny to think about when I started my company, everyone would ask me, are you in this to sell it? Are you in this to, you got that too, didn't you? Like off,
absolutely.
Like 3 weeks.
Yeah,
right? What were the questions everybody asked me 3 weeks in?
It's funny. So, I mean, this, and if everybody doesn't, then that's fine. So, for the first 2 years of AIM Open House, 2.5 years, we didn't charge a cent for any part of our product. So when we went to our first, and I think we did our first conference, I want to say it was an Inman conference it was ICNY 2015 at this point. And we got that question from so many people. It's, well, why did you start the company? You're looking to sell it. And my response was simply, you never start a company looking to sell it. You just kind of see where it goes, right? If the sale was the best option for the company, great. If an investment was the best option for the company, great. But yeah, it's interesting that, every founder out there, when you start a company, it's amazing the questions people ask you, well, why are you doing it? Well, I'm doing it because I'm trying to build something to make a difference, right? And that's the real answer. Right. And whether it's going to make a huge difference across the world or it's going to make a very small difference like AIM Open House in the agents that get listings. Or my niche part of the real estate market is very, very small. Yours a little broader, especially now on Agent Inner Circle. and with Barcode, it was a little broader because any agent out there, any broker out there could have essentially used your services with Barcode, right? They just need to hear about you, you need to pitch them, and you need to close them. With Agent Circle, same type of thing, right? Anybody can use a sales letter, an expired script, and all the free content that you provide. And if they want the more advanced coaching, then they can do those things. But with AM Open House, we're if you don't have a listing or you're not on a team that somebody has listings, you're not part of an office where someone's going to let you do your open houses. There's absolutely no need for my product in your business. Right. So, it's funny that, we got that question constantly, like, oh, you're just building it to sell it. And again, like if that's the right move for the company, if that's the right thing for us to do, because another company is going to come in and say, you know what, you're at X and we can take this because of our contacts and our customers and our reach and go bring it to here, then maybe that's the best bet. Or if someone comes in and says, you know what, if we invest in it, we also have these strategic contacts that could grow it from here to there, then maybe that's the best option. But yeah, I always say you never build a company just to sell it, although that might be what happens.
Right. And on the flip side of that, when I'd say, well, no, I'm not really, you didn't build it to sell it, then you get the question of, oh, well, did you build this to run this forever?
Right.
Like, well, no, I didn't do that either. Right.
Right. I'm somewhere in the middle of those two.
Right. And I would always say, if the deal is right, the deal is right. And you were just expressing the same thing, which is, if it makes sense for both parties and you want to go forward with it, you go forward with it. And I think that's very much the case on both sides of the aisle with that. Certainly there are certain situations, and, I can't name any names, obviously, but we were actually talking with a company recently who seemed like a really perfect fit for what we might be doing and what we might be interested in. And then when we spoke, they had changed their model pretty significantly in terms of who they were going after.
Nothing like a good old pivot.
Right. And their pivot was, their pivot might have been, and it might still be a great pivot move for them. But that pivot, the way they pivoted that way made it such that it didn't match up with the rest of
your venture goals were
and the demographics and exactly what our venture goals were. So again, it's not about, what are the exact thing you're looking for, as opposed to sort of we're looking for the right fit of what we need at the right time kind of a thing.
Right. Interesting. And I guess that kind of plays into, again, we were talking yesterday about, how investors look at companies and how they value companies and what they're kind of looking to do by investing in those companies. And I know not only did we talk about Placer yesterday, but we talked a little bit about Snapchat yesterday. And, and Snapchat's one of the products we could talk about again. But, I look at some of these other companies like, Amazon, right? Amazon today is a hugely profitable company, right? But when they went public, they were losing money hand over fist.
Oh yeah.
Hand over fist. And people really believed in what Amazon has done. And honestly, I don't know how I would live my life today without Amazon. $100 a year for free 2-day shipping on anything. And we joke about it, we say anything, but literally anything I want to buy will be at my door in 2 days. It is unreal. And, it's funny. I see, Uber obviously hasn't gotten public yet. And I see an interesting thing happening with if they go public. Obviously, the venture cap guys and all the investors, they want their money out of that company, right? They've invested billions and billions of dollars. They lose $1 billion a quarter.
That's what I was gonna say. What isn't Uber like upside down? Like, aren't they losing money quarter over quarter?
Hand over fist. The last quarter, they lost something like $1.1 billion or $1.2 billion in 3 months. Like, it's not like they lost. It's not a small amount of money. They're losing billions of dollars a year, and it's not like
we're talking like government deficit dollars.
Right, exactly. Like you're cutting a program out of the government to save $4 billion.
Save $4 billion. It's Uber.
Right. So it's like crazy, and the only for me anyway, the only place for Uber to go is public, right? Who else is investing in that company? If you're not already invested so far in that you have no choice but to give more money, there's nobody else coming in and saying, yeah, you know what? I think this is a good investment. let me give you $5-10 million and please lose it as quickly as physically possible.
Could you imagine, hold on a second, could you imagine Uber going with the Ford model and saying every Uber driver should be able to afford investing in Uber?
That would be interesting, but terrible at the same time. You know what? Did you read the article today that Dan Saka's getting out of the venture cap game?
You mentioned it to me. I haven't read it yet, though.
Yeah.
But you mentioned it earlier. Yeah.
Yeah, I wanted to know if you read it. I know we
it.
talked about it. So, so Dan Saka, he's been on Shark Tank as an investor. He was a really early investor into Instagram. I think he was an early investor into PayPal. He's a huge investor into Uber. And as it turns out, he was such an interesting investor. He wouldn't just put money into a company. He would approach it. So, like, one of the reasons why he's getting out, or from what I understand from the article, and I've only read 2 articles on it, so I don't know if every single point is going to be completely accurate. But apparently what he was doing was he was approaching Uber employees, and all of them have stock options, especially ones that have been there long term, and basically saying to them, I want to buy the private stock that you already have in Uber before it goes public. And without ever spending a day in the company, not investing from day one, he bought up something like 4% of Uber, valued at $60 billion, talking about $250 million investment. You're not talking about something small, but a really large investment. Mm-hmm. And apparently him and the CEO, Travis Krupnik, something like that, got into some sort of like argument where they used to be friends, but now they're not, because by buying as many shares as he did, he was able to get some sort of voting rights for what could and couldn't happen inside of the company, even though he was not an early investor and he was an employee of Uber. And he, from what I understand, he's got and this is again from the article, he's got a couple houses, he's got a young family, and he basically just said, I can't deal with the day-to-day anymore. I don't want to be a part of having to deal with these major decisions and mentoring people and doing all these things. So he's no longer, and I would assume he's not going to get out of the venture game where he sells everything he has. But from what I understand, his fund is closing. They're no longer raising any money. They're no longer going to be investing in any other companies. And in the article, it actually had a quote from him saying, I will no longer be on Shark Tank. Like, he wants no part of doing any sort of venture capital work, period. And to see a guy that big, that successful as a venture capitalist, just basically bow out and say, I'm done, is really interesting to me.
Do you think it was really, I mean, it seems like, and it sounds like, I didn't read it obviously, but it sounds like it's almost more a personal thing, where it's like, he just, it doesn't seem like he's doing it for, at least from my read on it so far, it doesn't seem like he's like, the bottom's falling out of all these investments and I'm piecing out because it's a strategic decision. It's
definitely not.
It seems more like a personal
100%
decision.
I totally agree with that. I don't think he's doing it because he's losing money. I think he's doing just fine. But I think that the emotions, especially I guess when you're playing on his level, the emotions that go with that kind of money, I'm sure, are not very small. Again, it's not like you're investing $25,000. You're investing serious, your life-changing money for pretty, 99% of America, and they're just investing that in a company. So yeah, I agree with you. I think it's totally personal.
Right, and not only that, but once you get to that level, and every person you add to your company becomes another concern. Not that you're not equally concerned if you're a 2-person company or 10 or 100 or whatever, but I can understand where decisions that you make affecting the lives of thousands of people and their lives can get taxing over time. Yeah, especially when there's drama from other folks that goes along that.
Yeah, that can definitely never be fun. But I just thought, he's a young guy. I think he's in his early 40s, late 30s. So just interesting to see him just kind of bow out and be like, "That's it,
bow out,
done my part. I'm out." But yeah, so it's
that brings up a question though. It brings up a question though to go on the other side of this, which is, seen a lot. Last, I don't know, what, 2, 3, 4 years, 3 years, I'd say, we've seen a lot in terms of folks that are investing, like money, venture capital money coming into the real estate space.
Yep.
And especially in the real estate technology space, right? I mean, how
Yep.
many, God, I can't, we're
I
well
think the
over
company
dozens of companies that
does huge companies. There's that even that one
Oh,
company.
man.
What is it? Open Door, Next Door. There's something they out of Arizona,
Yep.
and it's one of those like you can put in your address and we'll buy your house in 2 days, right? And they've raised like $500 million, $400 million. There's a wild amount of money coming into real estate technology.
Yeah. Do you see there being a bubble, a bottom to this? Like, is there?
It's interesting. I think that I wouldn't say it was a bubble per se, because the one thing about real estate technology is it is vastly different as we see new companies come out, right? So like, in my space, in the open house space, right? I have 3-4 competitors, right? But there's not 50 competitors. And in Open Door, Next Door's case, right? They have their model, but then you can look at what they do and you could say, well, those are we buy ugly houses and we buy, whatever it is, those house companies
Sure.
that buy houses in 2 days anyway. So I think, to say there's a bubble, I don't know if I would agree with that, but what I would probably agree with is the fact that there's too much early investment in real estate technology, meaning until something's proven that is going to make a difference in real estate, and I think a lot of investors get crazy about it because in so many other industries, an idea becomes a reality very quickly, right? But in real estate technology, average age of a real estate agent, according to NAR, was 57.5 last year. Okay,
Yep.
57-year-old person is not embracing downloading an app and changing their entire business in a month. It's just not going to happen. They're like,
Sure.
no, I'm set in my ways. I've been making money this way the whole time, and they're not going to change
Right.
everything
Why mess
about
with
their
success?
business. Exactly. So what I do think is there's a lot of room for consolidation. And whether that's, I didn't think we were going through it today, but, like, I'm a real estate agent and I've been doing it for 11 years now or 10 years now. But like the MLSs, right? And we have seen probably 3-4 companies now try to come in and consolidate the MLS, right? They say basically, we can be the nationwide MLS or we can be the statewide MLS. Like New York State, Long Island, we have one MLS, but throughout the state, there's probably 10. New Jersey, it's got to be 16, 17. And it gets to a point where it's a crazy amount of MLS. We don't need this
it's
many
a nightmare.
MLSs. Yeah, like I get one
I
per
know.
state. I don't think that it should be one nationwide per se. But it's a lot of MLSs. When I pulled the list, when I was trying to really. Oh, go ahead. Sorry.
We at Barcode. Well, I was just going to say to add on that. At Barcode, we serviced roughly 90 different MLSs.
Yeah.
With our product, and that barely scratched the surface. I mean, they're well past hundreds. What was it? 4? Is it 4 something at this point?
No, it's way more than that. There's
7.
There's 1,200 MLSs across the country, and some of those MLSs have less than 100 members. Like it is a crazy big number.
Is it still 1,200? I know we've seen crazy consolidation over the last 2 or 3 years. I thought it was coming way
you
down.
You could be right. It probably has come down. That's a number from about 18 months to 2 years ago. When I last looked and cared about how many MLSs there were.
Yeah, but it's still ridiculous. It's still a wildly ridiculous number.
Yeah. Even if it was 500.
And especially the ones that overlap. Right.
And even if it was 500, that's 450 too many in my eyes, right? I think that there is.
When we started working with Chase International, which was one of our first companies that we sold to when we started Barcode, or very early ones for brokerage deal, there were 9 MLSs. Actually,
that they were a
12
part
when
of.
we first started. No. There were 12, but then it quickly went to 9 that serviced Lake Tahoe.
Come on.
Yeah. Seriously.
Come on.
One was I remember one was ridiculous. Incline Village Board, I think, was the name of one of the ones that was ridiculous. It was tiny number of people, and ridiculous amounts of money to to like, to use the data every year. I mean, it was just,
Right.
it was unreal. Yeah.
Well, let me ask you this. So, there's been a ton of discussion about, I don't know if you saw the article a couple weeks ago about Zillow, quote unquote, entering the real estate game, right?
Yeah, I don't know how much of that was puffery or what, but
I don't actually believe that Zillow wants to enter the real estate game, but that's me personally. I think that's more of a headache for them than it's actually worth. But I could be totally wrong. I don't know. But I think it was a unique opportunity for Zillow to basically create that nationwide MLS, right? To say, if you want to look at a property, you come to our site and you can look at it in any state, in any city, in any zip code, and it's all right here, right? And Realtor.com kind of tried to do it too, and Truly, obviously, who they bought. But it's really interesting to think that, let me preface it with this. Did you see that Zillow recently turned off the manual listing entry for agents?
Yeah. So
if you are no longer part of, and it's kind of crazy because when I looked into it, I was like, well, it's okay, because if you have a brokerage feed going into Zillow, it's totally fine.
Mm-hmm.
But apparently you can't give a broker's feed into Zillow unless the MLS is already into Zillow. So the brokerage basically has control to go on and off, but the MLS basically has to okay the data going in and out, which, again, but it puts Zillow in a very unique position, especially right now, to turn around and say, we have centralized the data, and if you want it, we have it all. And as a tech developer, right, you now have to go through us to get it. And it's a really interesting piece of the puzzle for
me. So how much, interestingly enough, we went here, but how much do you follow the RESO group?
I do. I follow them. I unfortunately haven't been to a conference. I've tried to go to two of them, and unfortunately they just conflicted with other things. But RESO is fantastic. I know they're trying to make the standards and the whole deal.
Right. So I went out to RESO. I was at RESO in Chicago, and actually RESO is going on this week in Boston right now. It's actually going on right now. So a lot of people out there and discussing all that and so on. And there's like 3 or 4 different initiatives right now to try to figure out a nationwide MLS.
I feel like there always is. And there's what's the other thing that's out right now?
Right, there has been for years now.
Right. They're trying to do upstream.
Yeah, I mean
too.
The whole front end of choice concept that they're doing, and upstream and
upstream.
Yeah, exactly. That's what I mean. Like upstream is one, and then Zillow's sort of trying to do their own, and it just, it's a mess. I'll not use a different word for Facebook. So it's a mess, and I think it'll continue to be a mess. Now, that being said, have you seen a ton? I've seen some, but not like I've seen consolidation where boards sort of are buying out each other.
I've even seen lawsuits.
But have you seen
boards.
much? Yes, I see lawsuits between boards pretty consistently, but I don't see much in the way of like VC money going into boards. Maybe I'm wrong there. Maybe I just know about it, but I haven't read a lot of stuff about that.
Yeah, and part of the reason might actually be their tax structure. I don't know if they're formed as nonprofits. I don't know how the boards are typically set up.
Some are, some are not. Just like the MLSs. Some MLSs are board run, some are private for-profit corporations.
Interesting.
So
I don't know why there's not money
some
that
are
goes
set
into
up
that.
as trade. Yeah, some are set up. It's not technically non-profit. I think it's a not-for-profit. And I think it's listed. Well, no, there's a difference. There's
I know.
501c3 and 501c4, and they're very different. I ran that nonprofit when I was younger.
Good for you.
There was this cool in Vermont. There was this cool program called Youth Links, which is there's a group.
So now you're gonna make me feel like a dick. I get it.
It's a group out of DC who funded a group called Youth Links, and what Youth Links was a nonprofit grant money organization that was all run by a small board of high school students. So
that's actually kind of cool.
The group in DC provided the money and the funding and sort of the initiative of the types of things that we would be investing in or giving grant money for.
Yeah, of course.
And then our group, me and was it 6 other people throughout the state of Vermont, We all did, the grant reviews, the back and forth between the organizations as to like why we'd approve it or not, or partly approve it or whatever. A lot of the follow-ups with like how the money was actually spent, and the marketing to like get grant proposals, all that sort of stuff. So
Right.
yeah, so I had to learn all the lovely differences between nonprofit and not-for-profit.
For-profit, right.
In doing that. And then also difference between that and trade organizations. So,
Cool.
yeah, again, like for example, in Massachusetts, MLS PIN, the MLS,
Yep.
is a privately owned for-profit corporation that runs the MLS.
Really?
But but it's not run by the Massachusetts Association of Realtors. And actually, in Massachusetts, there's multiple. There's the MLS PIN.
Back that up for a second. So MLS PIN is a for-profit corporation, but the board itself is actually
the Massachusetts Association of Realtors that are not there. I don't know what MAR is officially set up as for like a corporate entity, but I know that MLS PIN and MAR are not related in terms of like MAR does not run MLS PIN. There's no.
So that's similar on Long Island, right? So there's LIBOR, the Long Island Board of Realtors, and then there's MLSLI.
MLSLI, exactly.
Right. So the board, I don't know how the structure is. I've never honestly looked into it. I probably should. The board essentially has absolutely nothing to do with the MLS, even though we pay dues to both of them.
Correct. And then in Massachusetts, the crazy part is that then there's other boards. So MLS PIN covers Massachusetts, but then there's also the Cape and Islands board, or I want to say Cape and Islands, but there's another MLS that covers Cape Cod and Martha's Vineyard, separate from MLS PIN. Yeah. Oh yeah. Yeah.
Interesting. All right, so let's get back to venture capital.
The VC world. All right.
Let's get back to that was a tangent if I've ever seen one.
Well, we ended up getting into VC world into the MLSs, which is who talks about that, right?
That was actually what I was going to ask you. Why has a VC firm not been invested in an MLS yet? Because I don't know why.
Well, I don't know, they haven't. Maybe those deals are happening behind the scenes.
I guess.
Like, I wouldn't be surprised with some of the bigger groups if they are. But a lot of the bigger ones are run by the associations, and I don't necessarily see them taking on investment like that. But I think there is investment way up top, like upstream and those sorts of things. I think there's
those guys have
money
investment
related to sort of the bigger projects.
Right.
So I don't know.
Let's talk about upstream for a second. So a 3-year-old project, venture funded, the right people in place across the board. Why haven't we really seen anything from it?
That's a good question.
I can't understand it. I thought upstream was going to be a huge game changer. And not to say it won't be, but
you want to know the real answer?
A long time.
You want to know the real answer?
Yeah.
Politics.
You're right. You're absolutely right.
It's politics. That's all it comes down to. It has nothing to do. I mean, you said it. The people that are in charge there are brilliant minds.
Right.
The concept of the project is something that's, utterly necessary.
Right.
Heck, Canada's already done it, right? They have the CREA feed. I know there are some differences, and we don't need to get into all the nitpicky differences between what CREA did and what they're trying to do. But my point there is, it's not the technical aspects of it whatsoever. Really. Right. It's a big project. Don't get me wrong, but I think it's just politics. I think every decision takes 10 times as long because
a lot of red tape.
Right. Because it affects a lot of people, right?
Yeah, I guess it does.
Look, think about it this way, right?
1.2 million people.
Now, I don't know if this is still true, but it was as of a year ago, a year and a half ago. There are boards in Pittsburgh, for example, that do not allow for agent websites. For MLS data on individual agent websites.
They don't have an IDX or like a
there's an MLS. There is, but only
No, no.
brokerages can use it on their website. Only
So as an agent,
brokerages
if I'm in
have,
Pittsburgh, I can't put a
right?
property search on my website.
Not as an agent website.
Or well, like, and you wonder why companies like Zillow, Realtor.com, Trulia make it in the world.
I know, right?
How is
Yeah,
that?
and that
We
was
are in
that blew me
2017.
away.
Like we're in
Right.
2017.
And like I
How
said,
does that feel?
this might have changed, and let me give the caveat. This may have changed in the last 18 months since
Sure.
I last did the update, right?
I hope it
And if
did.
it has, fantastic, and I hope it did. But we're still talking 18 months ago. I know they were doing that 18 months ago. It's something we
That is
dealt with at Barco for
unbelievable.
years. Yeah,
Absolutely unbelievable.
yeah. I'm looking at, but then again, then you start wondering about upstream, right? And you start going, well, why isn't it in place? And you say politics, and you go, well, what are the politics? You start thinking about things like that. Well, if upstream goes in place, and every agent can have MLS data on their websites, do you think that upsets the balance of what brokerages run the Pittsburgh market?
Yeah. Interesting.
You know what I mean?
Do you think?
And I'm sure there are.
You sure what? I'm sorry, you cut out. I'm sorry.
Excuse me.
So it's funny. So we're talking about the MLS and their data and the whole deal. And honestly, I don't think venture capital hour was going to turn into MLS data talk. But while we're here, so a couple years ago, and I don't know if a lot of people know this, but I know you know this, but Zillow doesn't buy a lot of companies, right? They've only made 12 to 15 acquisitions over their entire life.
Mm-hmm.
But one of the acquisitions they made was a company called Retsly, RETS.LY.
I know. I saw that. Yeah.
It's a cool product, right? So one of the issues, and I don't know if you know a lot about Retsly, but I'll give anybody who's listening. Okay.
Yeah. No, go ahead. I do know a good bit about them, but give the folks who are listening a quick background, because
I'll give you a quick background. So MLS data is given to tech companies in this archaic form where we have to connect to the MLS server. We have to download the data. We have to centralize it, naturalize it, and then put it into our own databases to actually be used. What Retsly does is they take all the data from the MLSs they're connected with, they put it into their own database, and they allow tech companies to just ping an API. And an API is an application processing interface. Is that right, Alex? API? Application processing interface?
Yeah.
And basically what an API does is it's a web call. So I say, go to check Retsly / this property address. And it's more complicated than that, but for simple terms, check this property address. And if it exists, return the information. Okay. So what they've done is, or what they're trying to do is take all the data and allow tech companies a very, very simple way to connect data from any MLS out there and get the responses back to use those properties or use those agents or whatever the tech company is looking for, and get really naturalized, real information that a tech company can then go take and turn around instantly and actually do something with, versus having to spend weeks, if not months, centralizing it a RETS feed or an IDX feed. So I thought it was a really interesting acquisition a couple of years ago when Zillow did buy them. And I think Zillow had the foresight to say, wow, this is going to be something that tech companies can't live without.
Mm-hmm. Yeah, but the problem is, I think you're right in that, but I think there are, again, we're talking about there are like 4 companies that are trying to do the same thing, right? I think, and actually there's Matt Kropp, a friend of mine from Laboratory B, made a comment here that said, have the MLSs, and he's not really in the real estate world at all. This is just somebody from tech world. And so he says, have the MLSs discussed an open, interoperable standard that would allow them to federate as an alternative to something like Zillow, building a platform monopoly? I would. That is way too intelligent. Way too intelligent to actually work. No, so the group we mentioned earlier called RESO is the Real Estate Standards Organization, and essentially what they do is set a RETS, real estate transaction standard. That's what RETS actually is. It's
Right.
the whole RETSLI base came from, is real estate
Right.
transaction standard. That standard, NAR said that every MLS in the country, NAR does some interesting stuff with this. So they say that every MLS in the country must be on RETS, whatever, first it was 1.4, then it was 1.5, whatever, and then it was 1.7.2 became the right. 172 became like the standard.
It's a mess, yeah.
Right. So when they did that, and this is back in 06, 07, something like that, they came out and said...
Was it that long ago, really?
Oh, yeah.
Oh, I didn't realize
they first came out and
around
said
that
every
long.
Organization, well, it wasn't RESO. So back up, right? So real estate transaction standard is different than RESO.
Right.
RESO is an organization that's trying to get all these various standards implemented, and the MLSs to live up to whatever standards and all this and that, right? But this is going back, and I want to say it was like 06, 07, something like that. And it was early when we came into the industry, because we actually ended up getting into fights with a bunch of MLSs about this same thing, which was...
Wait, you fought with an MLS?
NAR
I can't imagine
said,
that.
Oh, and we actually won some.
I bet you did.
Oh, no, I'm not joking. One was, we got a bunch of them to change their rules. Like the main MLS wouldn't allow sharing to Facebook.
What?
Yeah, I know. And we're like,
all the rules to have, like that was the rule.
I'm like, you can just copy a link and put it on Facebook. Like, there's no difference between the button I'm pushing on my website and me copying a link and putting it on Facebook. Like, you can't stop
all the button is
people from doing it.
Posting,
literally putting the link into Facebook. Like, this doesn't. So, like, we're nice about it. We outlined all of it and whatever, but we ended up getting them to change the rules. But back to the point here, NAR came out and said that all MLSs have to meet the RETS standard by a certain date.
Okay.
Right? And that date came, and that date went.
Went flying
by, right? And nobody had. And then they actually set a second date, and they said, well, if you don't do it by this time, we're going to be really angry with you.
Right. And nobody did it.
Nobody did it. Well, it's just interesting to me that, if NAR wanted to, right? NAR has the power to, NAR being the group that sits up at the top of the vast majority of these boards, right?
Also known
as
the largest trade association.
Liability insurance, largest trade association in the world. Yeah. Now, as I'm aware, as I know it, the MLSs carry their insurance through NAR, don't they?
I wouldn't be able to answer that question with any sort of intelligence.
The reason I say that is, and if I'm wrong, somebody can correct me, but I've heard this situation play out in a number of instances where when NAR wants to enforce something, there's the whole carrot and the stick, right?
Right.
NAR has a lot of both. NAR has a bunch of carrots that they can give people, and I know that one of their sticks, from things I've heard about in the past, are things that are related to pulling insurance or threatening to say you won't be covered under X, Y, and Z, or you won't be, or we'll pull whatever. They have sticks available, right?
Right.
They've tried a couple little carrots, but they've never put a stick on it. They've never said, if you don't do this by X, we're going to come in and, it's going to be an issue for you. And because of which nobody ever did it, nobody ever really updated. RESO's doing a great job in terms of, promoting it and setting up ways that make boards want to have this integration. But yeah, nobody's enforcing it. Nobody's really backing it.
Well, how do you really enforce that from RESO perspective? Obviously, everyone wants to be a part of RESO because the idea behind RESO is fantastic, right? What they stand for and what they're trying to do for the industry makes a ton of sense. It's hard for anybody to be like, I don't like this idea. This seems bad. But if you're Riso,
Right.
how do you turn around and make it enforceable? Because they kind of police themselves, right? Like the MLSs, there's no way to do anything. Yeah, they can.
Riso as an organization can't.
Right.
NAR could.
Interesting.
Right. At least NAR could for.
In theory, NAR could.
NAR could in terms of non-private. Like there are a handful of privately owned MLSs throughout the country who could say, go screw. But honestly, most of the privately owned ones that I know of have already made the move. Like the big dogs already have RET standards pretty capable. And they're not necessarily perfect, but
they're close enough. And I guess the ones that really, and I hope I don't offend anybody saying this, but I guess the ones that really care about their members are going to make that move because it makes sense for them to, right? It enables more technology and more things to happen across their MLS than the ones that don't, right? They're looking in a way, by not doing it, you're almost saying, I don't really care about you. Just make sure when our dues are due, you pay on time or we'll hit you with a late fee. It's one of those situations, right? And yeah, it's kind of crazy. And like our MLS one was compliant with it. And I know, a lot of them are, but it's interesting to see a lot of them just don't care.
Yeah. Well, I mean, I think it's partly why we see the consolidation that we're seeing. I think it's partly why, and it's tough too, because there are so many good associations out there. Like I know a lot of really good associations with good leadership who provide incredible amounts of value to their members and, that sort of stuff. But I think there are some out there who just sort of give those a bad name. And don't.
I agree.
Don't.
I think there's, in the end, I guess it's too many, and you can't police them all, and we already know that. Okay, but on that note, let's bring this all the way back. We're bringing it way back. So yesterday we had a conversation about Seth's book. I bought it on Kindle last night, and I also ordered a couple copies of the book. So
like it.
I honestly, to be honest with you, I bought it last night. I passed out on the couch. I was exhausted. Yeah. So I didn't even start it yet. But I'm planning on reading a couple chapters tonight. From what you told me, it's an easy read. So I'm going to start doing that tonight. But I did buy a bunch of hard copies of the book. So if anybody who's watching this is interested in a free hard copy of the book, leave a comment. Over the next 3 days, for anybody who makes a comment on any one of me and Alex's posts, I'm going to send you a free hard copy of the book. I didn't even tell you about that before, Alex, but I think it's a cool idea, Seth. I hope you're okay with us giving away a copy of your book. I know that you're really going to care that we bought it and are giving it away. But anyway, so it's one of those things I want to do. So if you've made a comment on anything that we're doing, and
so what's this, the next live video? Is that what we're doing? If any of these folks show up to the next one and make a comment, because we're going to be doing another one.
Starts on the next one. Starts on the next one,
right? So the next one we're doing, we're going to be reviewing Seth's book where you've read it, and the folks that comment there.
Honestly, I don't know if I'm going to be done with it by tomorrow or the next day.
All right.
But
that's fine.
Starting
the next
tomorrow,
the next after hours.
Yeah,
the next after hours we do.
Starting from that day, anybody who comments, watches, whatever, has fun with us, or makes us answer a question that nobody else will, I'm going to send them a free copy of the book. We're going to pick that person over the next, maybe I'll pick a person a week. I don't know. I ordered a couple of picks. Anyway, so it's getting. I know we're both on the East Coast. It's 10 o'clock. I haven't eaten yet.
Yeah, me neither. So, time for dinner, right?
Yeah, it is. It's time for dinner. Yeah, I don't know how an hour just went by.
I just want to back up.
We'll do 30 minutes. It'll be fine.
Yeah, right. We'll do 30 minutes and then it's an hour. I will say, though, how many days or nights or whatever have you and I been like, brainstorming or talking business or whatever and turned to each other and been like, oh, we should probably eat today.
Yep. Too many times. Yeah. Way too many times.
Too many times. So on that note, I think it's time for dinner.
Yep.
That's awesome about the book giveaway. I'm excited about that.
Yeah, and I think what we'll do is, aside from Seth's book, there's some other people who have written books very recently, and I'm sure we will be buying their books and giving those away as well. So, yeah, just keep watching, and we appreciate all you being here.
Absolutely, I love it. All right, man.
Alex, I'll talk to you. I'm sure in a couple hours.
All right, have a good dinner. I'll talk to you later.
You too, man. I'll talk to you.
All right, later.
Later.